It was a day where the markets felt every tremor from global headlines. As the closing bell echoed, the Nifty 50 settled at 24,971.9, down nearly 0.56%. The Sensex mirrored that drop, ending at 81,896.79, a slide of over 500 points. What really stood out wasn't just the red on the screen, but the sense of unease lurking underneath. We opened steady, hovered near 24,939, and even flirted with 25,57. But as the session wore on, sellers took control, pushing indices close to their day's lows. Beneath these numbers was a story shaped by forces well beyond Dalal Street. Global sentiment turned anxious as U.S. airstrikes in Iran jolted oil to a 5-month high. Instantly, risk appetite faded not just here, but across Asian markets. Inflationary fears crept in, and the rupee weakened to nearly 86.75 against the dollar, reflecting this uncertainty. IT stocks bore the brunt of the storm. Infosys slid over 2%, with HCLTech and LT following suit. The trigger? A slowdown in outsourcing orders at Accenture, casting a shadow over the sector's near-term prospects. It was as if a well-oiled engine had suddenly sputtered, leaving investors wondering if the IT outperformance of the past would hold. But amid the gloom, some sparks did fly. Metals and capital goods bucked the trend. Trent soared nearly 4%, Bell added over 3%, and Hindalco advanced close to 2%. These sectors showed remarkable resilience, defying the broader market's downtrend. Meanwhile, small finance banks got a shot in the arm after the RBI eased priority sector lending norms. It's a reminder that even in choppy waters, pockets of strength can surprise you. Trading volumes told their own story. Vodafone Idea, Z, GTL Infra, and Ola Electric were among the most actively traded, underscoring the market's appetite for volatility and momentum plays. Yet, it wasn't all green. Reliance fell, underperforming peers, while Dr. Reddy's and Tata Steel moved against the tide, each telling its own nuanced tale. Some stocks, Omkar Specialty and Navkar Builders, sank to fresh 52-week lows, a sobering sign of ongoing stress. On the institutional front, foreign investors poured in nearly 600 crore, while domestic funds booked profits. Over the month, FII inflows have been robust, but DII activity suggests a bit of caution, subtle tug-of-war shaping near-term direction. Technically, the charts flashed warnings. A small-bodied candle with long wicks spoke of indecision and heightened volatility. The Nifty faces resistance at 25,50 and support at 24,850. Bank Nifty, though, flashed a bit of hope with a bullish candle, but remains boxed in a tight band between 55,800 and 56,200. In moments like these, the market is less about certainty and more about navigating volatility. The key plays? Momentum in metals and capital goods, fresh optimism in small finance banks, and continued caution in IT. Trent and BEL, with strong relative strength, could outperform if risk aversion cools. Meanwhile, Infosys, HCLTech, and LT may see further weakness unless sentiment turns. For traders, the short-term support near 24,850 on the Nifty is crucial. Momentum longs in Trent or Bell can work, but only with tight stops. Aggressive shorts in IT could pay off if selling persists. Above all, sector rotation remains the dominant theme. Metal and banking resilience set against IT struggle. What I'm taking away is this: market moods can shift on a headline, but opportunities persist for those who can read between the lines. Today's volatility is a test not just of portfolios, but of temperament. Disclaimer: this is for educational purposes only, not investment advice. Always trade at your own risk. Please consult your financial advisor before investing. Subscribe the channel if you like it.